Crude oil, daily forecast, July 22nd, fxempire.com. The light sweet crude market, as you can see, tried to rally during the session on Friday, but 109 has just caused far too much resistance for the markets to be comfortable up there, and we pulled back to form a shooting star. This shooting star is pretty much what we're looking for in a parabolic market as far as shorting. There's a lot of noise below, so the only way we're going to play this is buying puts or selling calls, one of the two. Options. That way, you have a certain amount of risk defined ahead of time, and you can just let it do its thing. 105 is probably going to be pretty supportive, so we're not expecting some type of meltdown, but this market has to pull back at this point. This is getting ridiculous. Um, if we do melt down farther than that, then fine, whatever. That just makes the options more valuable. But the risk, of course, when you try to short a parabolic market like this, is that it continues to be parabolic, and if that's the case, you can really get hurt in a futures contract. The Brent market is a little bit more difficult to kind of form a decision on, just simply because it fell on Friday, and you can see we bounced off the 107 level in order to form a hammer, and this hammer suggests that we are going to go higher. Um, that being the case, though, the hammer should, at this point in time, try to send the market maybe to 110, but it's just so choppy. We think it's going to be more of a grind, and quite frankly, you don't want to tie your money up in a grinding market like this. It's just too difficult to deal with. We certainly wouldn't sell it though, even though we think a pullback's warranted in this market, just as it is in the light sweet crude market. With a headline-driven volatility, this market's just going to be a bit much for us to risk any actual trading capital.